Good afternoon, ladies and gentlemen. Welcome to the Q1 FY22 Investors Meet of NXTDigital Ltd. On the management panel, we have Mr. Winsley Fernandez, Managing Director and Chief Executive Officer, NXTDigital Ltd. Mr. Amar Chintopant, Whole-Time Director and Group Chief Financial Officer, NXTDigital Ltd. And Mr. Yugal Kishore Sharma, Chief Executive Officer, One OTT Entertainment Limited. We will begin the call with opening remarks from the management as they discuss the company's progress in the digital platform space and their performance in Q1 FY22. Following which, we will have the forum open for a question and answer session. Before we invite the management, we would like to share few guidelines for smooth progression of this event. All participants.
We lost Banu.
Yeah. So Snyder, will you be able to
take will you take on from there?
Sure, sir.
Okay.
All participants
will be placed in the mute mode, and when anyone needs to ask a question, you can raise your hand. We will accordingly unmute you. You can unmute yourself and go ahead and introduce yourself with your name and the name of your company, and go ahead and ask a question. Alternatively, you can also post your question in the Q&A window. We will take the questions in the Q&A window post taking the questions from the queue of the raise of hand. Eventually, we will make sure we do justice and attend to all the questions that have been raised.
Okay. So let's start. Snyder, I think your audio is crackling, so not to worry. I think everyone that we have on the call can hear. Banu, good to have you back.
Sorry for the
I apologize, and my only request to Yugal Kishore Sharma, CEO of One Broadband, is can you do something about mobile broadband as well? Banu is traveling and so is Snyder, and therefore their audio and video isn't as good as Yugal. So we are hoping that at some point in time you give us mobile connectivity as well.
Vince, I will give them hotspots where they can latch onto the high-speed internet.
Thanks so much. Great. Good afternoon, ladies and gentlemen. Thank you so much for attending this meet of ours. At the outset, I want to wish you all a belated Independence Day for yesterday, as well as a happy New Year to all our Parsi colleagues. Navroz Mubarak. And I also hope that all of you are staying safe. These continue to be difficult times, and while we're all trying, I know, our best to come out of it, people have challenges, illnesses, and all I can do on behalf of all my colleagues at NXTDigital Ltd is to wish you, to stay safe and stay blessed. So without too much ado, I'm going to share my screen, and I'm going to start the presentation every time. Amar, Yugal, I'm assuming you all can see my screen. It's clear. I'll proceed.
Yes.
Great.
Yes.
Thank you. So very, very quickly, I'll walk you through some changes in the environment over the last quarter. We have a wonderful new Minister for Information and Broadcasting who also manages sports, Anurag Thakur, very, very progressive. And similarly, Ashwini Vaishnav, who has taken charge as the IT Minister. He's an ex-IITian, so he understands the tech aspects. And I think as a nation, we're very proud to have them and others join the portfolio of our Prime Minister to be able to grow the industry. On the same lines, we have a new secretary at the Telecom Regulatory Authority of India, our regulator. Mr. V. Raghunandan has come on board. And you'll be very pleased to know that he paid a personal visit to your broadcasting center just last week. He was very impressed with it, along with the senior principal advisor and advisors from the regulator. They made a visit to our broadcast center. They were very, very impressed with the technology and the future proofing that we have. One piece that has been doing the rounds in the news, and I'm sure you all have been covering it actively, is the new tariff order, new regulatory framework 2.0. It was the Bombay High Court has upheld the NTO 2.0, barring basically the twin conditions. The broadcasters have, of course, gone to the Supreme Court seeking solace in the matter. The Supreme Court has been very clear. It has not stayed the High Court ruling, but the next hearing is on the 18th, which is actually day after tomorrow, where the Supreme Court has asked for a short synopsis. On the other side, obviously, the big story doing the rounds has been the AGR case, where, Telecom, the Supreme Court has dismissed the applications, but Vodafone has filed a review claiming arithmetical errors, etc. So that is an ongoing process. Very exciting times for the media and entertainment industry. You all heard, obviously, about the ACT deal that happened with Partners Group just a couple of days ago. So that bodes very well for our industry, and your company is also very actively involved, obviously, in this segment and in future segments. So one of the things that's really getting to be big in India, and you will see it. It's something, if you recall, I hope all of you, if you'll have the deck and go back 1 year ago to when I made the first presentation, I spoke about satellite broadband, even before it was spoken about in the country as being the next big thing, and your company being actively engaged in it. You'll be happy to know that we are in discussions, and we will keep you updated and abreast of progress. But Viasat and OneWeb, Amazon, and Starlink are looking at India very closely. So that's great news for us. My colleague Yugal will talk about this a little later, about the amount of potential for public Wi-Fi hotspots, which therefore will be able to give us great connectivity, unlike challenges that we all face today. And there's a great resurgence in BharatNet, which is the government's proposal to connect all of India and make it as seamless as possible. That's in terms of what the environment is like. The biggest story, of course, what I'd like to share with you, and I thought I'd put it at the end, is one great thing where television is continuing to grow in India. There have been always talks about moving to OTT, customers switching off. Customers may have switched off, and some of you may have experienced it yourselves with others, have switched off a second television set or kind of reduced the exposure in terms of expenses on television. But the best part is there's a huge market that's still continuing to grow. There's tremendous amount of headroom, as it mentions here, with about 30 crore households covering 130 crore people. And we're talking about right now, there's just 21 crore households, right, which have television, at least one television set in the country, which is up from about 19.7 crores. So that's the amount of capability that's there. And those are markets which, as you slowly move out of the cities into semi-urban, semi-rural and rural markets, you're seeing aspirational models coming into play. That's on the environmental side. Just to share with you all some initiatives that we've done. Your company one thing we pride ourselves is our agility and our reflexes. We saw the challenges of the second wave, the second wave of the pandemic, and very quickly we recrafted our efforts and communications as well, came out with new special packages. We came out with different packages to interest different segments of society and socioeconomic classifications. We had all of that communications. We also continued to push very actively sporting events. There was the Euro 2020 that happened. There was the Tokyo Olympics, of course, which happened much later. But there was Copa America. There was the Wimbledon. All of that we leveraged very actively, not just on the video side of the business, but also on the broadband side of the business, where we have progressively grown. We look at communications as being a key. There's some very, very innovative processes that were put in place, communications that was put in place, that has been able to take us and put us in everyone talks about a quarter that has been really challenging, no doubt about it. I mean, I, for one, with my team, will put my hand up and admit it's been one of the most challenging quarters. And I think the agility and flexibility in which we were able to still hold our ground and look at what are the great value creation models during that quarter have held us in good stead. So that is in terms of the communication and initiatives. Your company has continued to get great coverage. We had a lot of interviewing happening. We had a lot of interviews. We continue to make it to the press. So the amount of column centimeter that we have reflects very clearly on the fact that even the media is very interested in what NXTDigital and the video business and the broadband business of NXTDigital is doing. We continue to sit on some very critical panels as well, both quasi-government and supporting the government as well on those panels. So very, very important and significant for NXTDigital. We are also very, very proud that we have continued to win accolades. Three of our colleagues, one is my colleague and CEO of the broadband business who's on this panel, Yugal Kishore Sharma, who has won who has not just won, he's been recognized as being one of the leaders in the industry and was awarded the Business Leadership Award. And two of my other colleagues, our head of HR and our group CTO, has both won awards. So that shows you that we are very, very, we also look at hiring only the best clearly in our industry, and we're very proud that they're able to be recognized by their peers and the industry for their performance. This is never a great slide to put, but I have no choice. It's very important. We had a challenge in the second wave, and we lost colleagues to the pandemic, not just the second wave, even earlier. We lost a total of 11 colleagues of ours to the pandemic and 4 to non-COVID reasons, and about 18 family members. But there's one thing, and this is something where the Hinduja group is different from a lot of other groups. We came together as one big Next Parivar, and that's why I've used the term Next Parivar, to help all those who've been affected in multiple ways, right? It's not just monetary support and healthcare, but we've also been able to provide employment assistance. And not just employment saying that, oh, hang on, you lost your husband to work with us, here's a job. No. We looked at the capabilities, we provided training for those particular individuals, we groomed them, and we've looked at recruiting them, not just in NXTDigital, but also Hinduja group companies. We're also very proud that we've been able to set up, our staff forced us to set up a fund and we've done a fund to help all these colleagues. Another unique thing that we did, again, we keep on talking metrics, we keep on talking, I'm sure all of you as analysts and investors, it's great to talk about performance quarter on quarter, performance year on year. But what makes that performance is the people. And I think if we take care of our people and we have good people, performance follows. And we've seen that. We've been able to take care, and to such an extent, we set up a thing called a buddy system. I'm sharing this with you today. Over the last 18 months, we set up a buddy system where anyone who was afflicted with the coronavirus had one person assigned to that person's family to take care of him, to ensure that he was taken care of, his family members were taken care of. Our leadership teams have been calling on affected team members, especially hospital cases or severe cases. Our team has always been there to help them, and we don't believe that we're going out of our way. We believe that this is our dharma. This is our religion. This is what the Hinduja group philosophy is all about, and it's nothing for which we don't think of it as different. So much so we've also started a vaccination drive countrywide. All our vaccinations for our employees are being borne by us, the cost. We took it one step further. We organized vaccination camps, including in where I'm sitting currently, the head office, which is in center in Mumbai. We ran a vaccination camp there for over 937 people. Our own staff, associate companies, our last mile owners, affiliates, their staff. We're very happy to do it because this is a very important thing that we did. And again, keeping in mind that people had done so much during this pandemic, it is very important for us to express our grief for those who lost, as well as recognize those who have performed beyond the call of duty. So just last month, end of last month, we had a town hall, ladies and gentlemen, for over 1,000 people of our staff attended the town hall, dialed in to it. And the agenda was first to remember those whom we've lost. Not just our colleagues, but also our colleagues' family members. Right? That was a very important thing that we did. We remembered them. We prayed for them. We also thanked 12 of our colleagues who retired from the organization. We set the tone in that for moving back to an L2 model, where we're currently, as of today, we've started an L2 model where we ensure that at the highest levels of safety and security, certain people can start getting back to office duties within an office space. Obviously, as I mentioned, with great focus on environmental health and safety. We're also very proud there were multiple people. There were during this last 1 year, there've been drivers, there've been office staff, etc., who've gone around, delivering papers, getting signatures. It was important for us to recognize them. and recognize them not just financially, but also with due recognition on that town hall. We recognized 8 such colleagues under this special category. We also had the privilege of recognizing 43 colleagues who went above and beyond the call of duty. I won't go into details, but we know colleagues who have literally slept at bus stations only because they had to rush to another location to help people where where connectivity had gone off, and information became such a critical thing, knowing what the situation was. People required news, people required broadband connectivity. My colleague Yugal and I, we had the honor of driving it right from the front, and we're very proud that we were able to felicitate these 43 people, mind you, from over 412 applications that we got for this. And we also are very proud to felicitate our head of HR as a super performer who was there for all our staff, especially during this dark time of the first wave and the second wave. I think that these are things that we're very proud of, that makes NXTDigital, that makes the Hinduja Group, I won't say different from others, but makes us stand out in the crowd. And it's something that we'll never let go, not for love or money, and not definitely, profitability is a happy byproduct of having a strong team that you respect and that you treat fairly. And this is what our philosophy is for the group. And that actually is reflected in our KPIs. If you look at it, while our video business, right, which should have taken a hammering, we were still able to hold on to it. There was a lot of agility and flexibility that was there, and we were still able to hold on to our base. There was a question asked of me earlier about ARPUs. Are we seeing a drop in ARPUs? First of all, as I mentioned, these ARPUs are ARPUs to us, not from the customer, right? This is ARPUs to the customer, much higher, 350 rupees, ranging from 250 rupees all the way up to 683 rupees. A huge range of, depending on the package. This is purely the money that comes into us, and which we retain our share. And the city, if you look at it, DAS 1 is the one where we saw a blip. And we realized why. We realized that was basically the city was where hotels, to answer the question that one of our analysts had raised, this was the hotels that were affected, where the hotels downgraded their packages and didn't want all the HD channels. They were happy to take SD until the hotels came back into operation. But when you look at DAS 2, DAS 3 and DAS 4, no change. It's been quite stable if you look at it across. And again, I'd urge you to look at last year as compared to this year rather than looking at Q4 of last year over the Q1 of this year. The reason being is that Q4 we started seeing life beginning, as all of you are aware. And Q1 again of this year, we started seeing challenges in terms of the pandemic, etc. But the beauty is we've been able to hold our ground. And I'm very proud about that, leveraging the biggest opportunity that we leveraged was broadband. We have grown by 93% our base over last year. And on a quarter-on-quarter basis purely, we've grown by 10%. I am going to pause here for a moment because I think it's very important to share with you that this is not something that came easy. These are not, it's not that people needed broadband and we were there. There are strategies. There was a lot of definition of the teams on the ground, and I'm going to request my colleague who heads the broadband business, Yugal Kishore Sharma, for a moment. Yugal, if I may request you to share your views on what's happening in the industry and where you see, the entire challenge that was faced, etc.
Yes, Vince, thanks. So I think as you had put up in the beginning, on the lighter side, I will start the notes. I think the fixed line broadband networks have been tested, tried, and the applications utilized to the highest level because the whole population was inside homes. And from that perspective, mobile broadband should be more de-choked, but I think having two of our colleagues in the call finding it difficult. So taking on that note, I think public Wi-Fi hotspots, ambitious program of the PMO, PM Vani, these are the kind of new areas that are emerging, and a lot of work is going behind to create a fixed line which we call wireline broadband level of experience on mobile networks as well. And that's where one area, the industry is moving very fast. B, I'm happy to share, which Mr. Vince had just touched upon, that there's an ambitious project of the government which is to roll out high-speed broadband to the bottom half of the country, which is like the rural India. So almost 500 million citizens would get access to broadband in the next couple of years. And that's the BharatNet Phase 3 project, which is what is going to open up. So at an industry level, fixed line broadband has got to be now the internet connectivity at every home, whether you are in a phase 1 metro or you are in a small town or a village. And that's what I think the pandemic times have created and very well demonstrated by the industry. Coming on our side, I think I would say not in a very I would say results oriented way, but if you see when the first wave came last year, everybody globally was taken by surprise, and a lot of companies who could stand on and Vince, from our side, I think the way the HR slide, which is a very unique slide that you would have seen in our deck today, it's all about our people, the way we carried forward our people as a parivar, the way we saw the risk level of work they were carrying out while servicing customers, servicing the network. I think this is also another breed of network warriors, I call them, and fixed line broadband cable TV warriors who have demonstrated. So second wave when it came, I think our company, as a Next Media Parivar, we stood tall, and that's what gets reflected in the numbers and the growth, and that's how I think we have been able to service our customers, and hence the growth has resulted out of that. So people really stood up organization wide, and customers had tested us in the 4 quarters of pandemic, and they found us to give robust not only product but also a very robust 24/7 service. So that's how I think the overall results have come, and of course at industry wide, people are acknowledging this. This is the only mantra to get growth. So this is my perspective on the overall broadband piece. Over to you, Vince.
Thanks. Thank you, YKS. I'll proceed, and anyways, we have Q&As at the end. So if there's any other aspects that you'd like a clarification from Yugal or any of my colleagues, please feel free to post them on the Q&A box, or you can ask the questions also verbally. The other KPIs that we share with you, and again, great performance where we've been able to hold back and reduce our churn over the quarter. Still, it wasn't as great as last year, the quarter, but good enough. Although the same month's renewal and our on-time renewal, we've been able to hold off. And one key reason why we've been able to hold this ground in terms of performance, and therefore be able to end up with a very, very robust top line as well as EBITDA, is basis the fact that the teams know exactly what was required to be done in these challenging times. What does that give you? Effectively, that gives you the company's emerging focus over the last 1.5 years, over the last 2 years, I'd say actually, and beyond, to focus on a sustainable model. And that is clearly reflected if you look at it in terms of the top line as well. Revenues, we're very, very happy that in terms, while we saw a slight drop from Q4 to Q1, and my colleague Amar will share with you thoughts on that. It's nothing that we are really worried about because Q1 is generally a stabilizing year. The fact is, when you look at it over last year, when the pandemic was probably less virulent than this first quarter of this year, we've still been able to grow our business by about 13.5%, our top line. And not only that, we've been able to also take our EBITDA to a decent level in terms of growing it by nearly just under 2% actually. Our challenge definitely was on the quarter basis, as in serialized quarter, but that again, like I said, is not something that we're really concerned about. And even against that effect, we were able to pull our PAT to reduce the gap, which was at about 30 crores last year. We were able to reduce it down to 28 crores. So overall, whatever we set out as an objective when we were hit in the face, the entire industry was hit in the face by the second wave in end of March, early April, we've been able to really hold our ground. In terms of subscriber debtors, again, no change. It's as good as it always was. We're at about 0.8% of subscription revenue is our debt at any point in time. We've been able to hold that. Again, here I'm going to pause for a moment before I proceed and request Amar to talk a bit on the financials, Amar, to set the tone right, Amar.
Sure, Vince. Thank you. So good afternoon, everyone, and thanks for being on this call. So I'll focus on the three aspects here, which are revenue, EBITDA, and PAT. But before I go through this, I'm sure all of you have seen the results of various companies and the trend, not only in the media industry, but also in the other industries, is that the Q4 to Q1 has not been that good, but Q1 to Q1 has been good. This is a general trend which has come across industries and largely in the media industry also. Okay, so taking that as a background, Vince, I think it's
Sorry, go on now.
Yeah. So taking that as a background, our revenue from Q1 of last year to Q1 of current year has seen a healthy growth, 13.54 crores, whereas from Q4 to Q1, it's taken a dip. And this is also because that we own content. So there are certain rights which we sell in certain periods of time. So last quarter had certain rights which we had sold. Therefore, that also impacted us. But largely it was the combination of both this and the pandemic effect. Then coming to EBITDA is not too bad. Against 50.4 crores of last year, we are at 51.3 crores. And again, like I said, 67.5 crores. Our Q4 generally has been decent. And if you see last year also, the Q1 is generally a stabilizing period. Normally, if suppose the pandemic was not there, the Q1 would have been a stabilizing period because of exams, people going on leave. This has been the trend which we've been watching in our company for the last 5-6 years, and the industry also largely it's that way. But in a pandemic period, obviously people are not going out for exams and holidays and things like that, but it's a pandemic effect. Okay, so it's a stabilizing period, and we believe that going forward, this will sort of turn around. And like in last year, we made up during the remaining 3 quarters. We hope to, and we expect that it'll sort of improve as we move forward. Coming to PAT, like I have said, always the difference between PAT and the EBITDA are 2 items: depreciation and interest. Interest, as all of you know, we are trying to sort of correct the capital structure by reducing debt and increasing capital, and we are taking various steps which we had announced also in the past. One of the things which is a rights issue, which we have announced that we have filed the draft letter of offer with SEBI and is following a process which we await necessary approvals from the regulatory authorities. So if that comes in, then it'll sort of give us a better effect on the capital gearing. That's point number 1. And point number 2, like I said, asset sales also we are looking at. Last year we had sold the Hinduja Leyland Finance shares and we made good that money by reducing debt. And we've always spoken about the land banks which we have, which can fetch us about 200 to 250 crores. Discussions are open, but we should never be desperate. That's how I would say it. So therefore, this is not a major concern for us. And as far as deferred tax asset goes, we still have a bank of 200 crores of deferred tax assets. We have just recognized 8 crores in this quarter. So we could have recognized 25 crores of deferred tax quarter, but that's not the way I think we should be going in. We look at the progress during the year and then we take the deferred tax assets. On subscriber days, we are always, because of prepaid, it's always a very efficient system. We are cash positive, and therefore it's a very, very healthy sign as far as our business goes. So that's it from me, Vince.
Thank you. I think Amar, the critical part is we're cash positive throughout. So I think that is the important way of the business aspect. So these are the KPIs. But then obviously the question is, I thought of sharing it with you, something again that we've been discussing, and I wanted to share with you an update because I think it's important to be transparent, and I've also discussed this with you all. There are a couple of things, and we mentioned this, that projects that we were looking to kick off in Q1 of this year, which have had some amount of pushback because of the pandemic. But the good thing is that it's taken off and we're well on course. For example, one is infrastructure sharing. We had got the approval, as you know, on April 14th. We then had to get the approval from other departments, etc., which has been processed. And 2 sites, in fact, have been set up, which are already operational. There are multiple other sites that are being set up even as we speak to basically go into what we term as a POC. So once we set up the sites, we first do a POC so the broadcasters have a level of comfort, etc., before we commercialize those sites. So the best part is all of that is done. We also had the privilege of presenting this to various government bodies and seeking their validation. They all believe that this is going to be a tremendous game changer in the industry in terms of optimizing the costs of nearly close to 90 million cable television households, including ours, obviously. So they believe that this is a great opportunity. As I mentioned to you, we also were very happy to host the new Secretary of the Telecom Regulatory Authority of India in our broadcasting center along with the team. They were very excited because they have been the one who've actually been driving the need for facilitating growth in the industry. So we're very happy to have them support this endeavor along with the other departments as well. This is the first thing that we're doing. The second thing I shared with you all very briefly in the last call, and I'll spend 2 minutes on it, is that one critical thing that we noticed, and we shared this with you, is that there are a lot of LCOs, local cable operators or last mile owners, who don't have the wherewithal to necessarily invest in technology or a head end. We've rolled out this new project called the 100 Next Hub, where we're looking at putting in 100 units, 100 head ends, 100 digital stations of ours across the length and breadth of the country. These owned and operated, very digitally advanced facilities have what's called an ADDS unit, Advanced Digital Distribution System unit, where we're able to receive hits, head end in the sky, video channels directly from the satellite, as well as our broadband team terrestrial connectivity is available, and we're able to redistribute this across the country. So we're looking at 100 new such sites coming up. We already are in the process. We will be announcing our inauguration. You will see a lot of press coverage later this month from Ranchi, Jharkhand. And then it's going to spread on to another 10 cities, another 10 locations within the short space of maybe a month thereafter. This is a very unique model because it allows last mile owners, especially when I was telling you that first screen, where there's the tremendous potential for wired broadband, as my colleague Yugal mentioned, and tremendous potential to still grow television households. So this caters to that. We've always been very agile and looked at every opportunity and been able to follow through. And this 100 Next Hub project is going to be is part of that. So each is equipped with the latest technology for broadband and video delivery. And the beauty is that any new services and products that we launch as part of our digital framework, which I've also shared with you in the past, will happen through these Next Hubs as the first port of call. So it's something that we've kept on speaking about. So it's a great thing. I'm sure you'll be proud to know that it's kicking off in Ranchi, Jharkhand, later this month. Also, similar model we've created called a cooperative model. We found that after the challenges of the pandemic, there are a lot of smaller last mile owners, etc., who don't have the wherewithal, but at the same time want to be able to own their own facility. We brought a lot of them together under a single umbrella and said, listen, why don't you all pool your resources together and be able to set up a digital head end to distribute signals using the NXTDigital feed. So this cooperative model that we've launched, you'll be very proud. We've already kicked it off in Manipur. We've already garnered over 12,000 subscribers there in the shortest possible time. We had to slow down slightly because of the second wave. But this model is another critical model that we believe will see the proliferation of digital signals and the Prime Minister's vision of a digital India all across India, where there is still markets that are far, far from saturation. Those markets are still not digital. And we kicked off this model in Manipur in July this year. And we're seeing that of course, they don't have the expertise, so we've even provided the expertise. And the way they augment their income, we're helping them saying, why don't you develop your own local content? Manipur, you have so many events happening in your town. Why don't you do live feeds from temples, live feeds from mosques, live feeds from churches? Take live feeds, redistribute them in your township. It's working out very, very well for them. That is the third piece that we're focusing on in this quarter. We've already started, as I mentioned to you. And the last interesting thing is we are continuing, as my colleague Yugal was mentioning, there's the BharatNet opportunity and so many other opportunities. We're working on how do we take not just broadband, but services riding on top of broadband into tier 2 and tier 3 towns. Those are towns that want a high quality of service. My colleague was mentioning quality of service plays a very important role. So we're working on this, and the first port of call again is to our own last mile owners, because that reduces our cost of entry there. And we're taking all the Hinduja Group products as we go along, and you'll hear announcements on that very shortly, because there is a proof of concept being set up. So I'm going to hold myself back from discussing it, but it's very much on the cards. These are integrated digital services, not just video and broadband, but will extend to CCTV and other group products as well, besides the whole gamut of products and solutions. So just to summarize, because I wanted to keep this short and crisp, the first thing is that it's been a challenging quarter. Every industry, every company knows that. But we have leveraged innovation and strategy, right? We've been agile to ensure that we take on the challenges of the second wave and be able to do something worthwhile with it. And we're very proud that we've been able to grow our revenues year on year by 13.5% over last year. We've been able to maintain, we've been able to grow, let alone maintain our EBITDA, which, as Amar was explaining, this is it's cash at the bottom line, right? Our PAT, we've been able to reduce the gap when compared to last year from 30 crores down to 28 crores. Our broadband business has grown significantly, subscriber base increase of nearly 100% on a year-on-year basis, which shows the kind of interesting opportunity that's there, especially against the background of the private equity deals that are happening, as you know, in this industry right now. Amar briefed you on our rights issue. We've already filed the draft letter of offer. It's a process that is going on. We are very clear that we've signed up contracts in video and what I was mentioning to you, like the City Networks deal that we've signed. We have started rolling those out as the lockdown slowly eases up, and we believe all of this will start showing in numbers in the second in Q2 and Q3. And 4 verticals, as I mentioned, that we will focus on as an organization to achieve our transformation into a all digital services company is, of course, our 100 Next Hub project, facilitating the cooperative model, infrastructure sharing, and our entire approach, our transition from individual vanilla solutions to offering integrated digital services. So with that, ladies and gentlemen, I'm going to end the presentation because I wanted to keep it short and crisp. The only other slide is an annexure, which anyways is something that is available on the website. So you please do feel free. But otherwise, I'm going to stop it right here, and happy to take questions from here onwards. Snighter, Banu, over to you.
Thank you, Winston sir, Amar sir, and Yugal sir for the insights. We would now take the questions. You may use the Q&A window to type your questions with your name and company name, or you may use the raise of hand feature in Zoom control panel. We will first take the questions from individuals who have raised their hands by unmuting the respective participant to ask the question, and then we will proceed to answer the questions in Q&A.
Okay. May I kick off the Q&A if you don't mind, Banu, because there were some questions that were asked of me, which I if you don't mind, I'll just go through.
Sure, sir. Sure. Please.
The first was on the performance slide in the PowerPoint, ARPUs, whether it's come down, is it showing a trend or just a blip? As I mentioned, it's just a blip, and it's only digital addressable markets, one, which is the cities. Yugal, would you like to add in terms of the broadband business? As we spoke and as we mentioned, the drop in ARPUs is not a drop. It is because we're amortizing them across markets that have a lower price base. Am I right, Yugal, in saying that?
Vince, completely agree with you. Yeah, so that's precisely, yeah.
Perfect. So that would answer the question on that. The question on the City deal, multiple sites. What is the amount of investment in CapEx done and CapEx planned this year? As I mentioned to you all in the last, and I think prior to that, there is no investment from our side on infrastructure sharing because we have already invested in the infrastructure. The beauty is like saying, I've invested in a vehicle and it has 5 seats and I'm now ready to fill up those 5 seats. So the investment has already been done by us, right? We are everything north of a couple of paise is to our bottom line. So we're very proud of that because it allows us to leverage the capacity that we've already invested in. It allows us to leverage the infrastructure we've invested in, and it allows us to leverage the performance metrics and the people that we've invested in, right? So there is no real capex. There was a point about liquidity issues of Citi. I think we have business, we have a business relationship, and I don't see those as really challenges for us. There was one question, view on technology on satellite broadband disrupting the industry and disrupting the company. When is it expected to launch? And can our company? I alluded to it. My colleague Yugal alluded to it. Satellite broadband will work in parallel with wireline broadband. Wireline broadband, as Yugal was mentioning, is the need of the hour, because to be able to deliver high quality broadband, especially in high population density areas, satellite broadband will play a very, very critical role as you move into urban areas where wired connectivity is a challenge and where you require mission critical connectivity. Am I right, Yugal? Hospitals, ambulance services, military establishments, those will require satellite broadband, right? And the beauty about it is, as far as we are concerned as a group, satellite broadband is again one piece of the jigsaw puzzle for us that fits into our jigsaw. It's not a competition to us. It actually complements our business, and we're very proud of that. And I will share with you all that we have been approached by a couple of players looking to enter the Indian space. We have been approached. We are in discussions. We're not desperate for a partnership with anyone. We made this announcement close to a year ago that satellite broadband has great opportunity. And why would we make a great partner? 4 reasons, as I mentioned, and I want to just recollect them. Why would we make a great partner for anyone looking at India? Number one, most importantly, we have expertise in broadband. We have over 700,000 customers today in terms of the wired broadband capability. The team at our broadband space has delivered some of the highest end projects, some of them unfortunately due to NDAs. Yugal, we can't share details, but just to tell you, we've done enterprise class projects that have exposed us to the highest level. That's the first thing. Second, any company would need a huge India footprint to be able to deliver to markets. We have a presence in 1,500 cities, 4,423 pin codes, huge potential for any broadband player wanting to enter the country. Third, most importantly, expertise in satellite. We have a HITS platform. We're the only platform which has HITS, obviously, and cable television and broadband. So automatically makes us a very strong contender there. And last, we have very, very good regulatory frameworks and governance. That fits in very well into any organization. So we see it as a great opportunity. We're raring to go. And how we go it, whom we do it with, what we do, and when we do, I think those are, it'll be crystal ball gazing, which is not correct at this point in time. So I'll leave those questions there, the answers to that question. Happy to take the next set of questions.
Sir, we have a question from Mr. Ranga Prasad.
Please, sir.
Sir, I would request you to unmute yourself and please go ahead with your question.
Good evening, Winfrey.
Good evening, sir.
Good
evening, sir.
You can hear me well?
Sir, we can hear you loud and clear. We think you have one of our broadband connections in your home.
At the outset, let me tell you, it's heartening to hear that you continue to be very optimistic about the future of our company. I'm happy to hear that. You must have heard that one of the Hinduja Group companies was able to hive off their healthcare vertical for $1.2 billion. And as a result, the shareholders are benefiting very handsomely. I hope we, in the not too distant future, can pull out a rabbit just like them. Apart from that, I had a few questions on the financials on which I would like you all to elaborate.
Sure. Mr. Prasad, before you go further, I want to tell you this. My fervent prayer this evening will be from your lips to God's ears, right? That we will be able to achieve that. I thank you, Mr. Prasad, like so many others on the call, for having the faith in our organization. And I can assure you that, as a team, we will continue to pursue all innovative ways to ensure that this business remains on the right track and sees the kind of traction that I'm sure that you'll be proud of. Sir, over to you for the financial questions, which my colleague Amar or any of us can go on, sir.
Okay. The first one is, even as the revenues fell in Q1 as compared to the previous quarter of Q4, there has been an increase in operational expenses, that is by about 3 crores. So if you could elaborate as to why it is so. Second, our depreciation expense has gone up substantially in Q1 as compared to Q4 and also Q1 of last year. Is this because we are investing further in capital equipment, or is it for some other reason? The third is, in spite of having a positive EBITDA, the interest cost has increased as compared to Q4 of last year. Now, is this because of an increase in borrowings, or is it because of having to pay a higher rate of interest? Because normally with a positive EBITDA, you would expect the borrowings to have come down, and therefore the interest costs have come down somewhat. So these are the three questions I had on the financials.
Sure, sir. Vince, I take that?
Please, Amar, this is
Yeah. So your first question, Mr. Rangaprasad, was, anyway, good afternoon, Mr. Rangaprasad. Nice to have you on the call. Really nice to have you on the call. So your first question, sir, well, revenue has dropped from 266 to 254 crores. The operating cost has gone up from 210 to 213 crores. So the revenue, like I mentioned, see, 210 to 213, sometimes we have blips. That was a foreign exchange hit that we took of about 3 crores. I'll also explain to you why that hit comes in. So that was a strange hit that we had to take in this particular quarter, and I'll explain to you in a bit when I talk about depreciation and other things, right? So that 3 crores is due to a foreign exchange issue. The revenue dropping, like I said, we had some movie rights. We own movie rights, and these movie rights were exploited during the last. They come up for renewal at periodic intervals. So this was one of the reasons where the movie rights, which were there last year, they do not have a cost, because these costs were amortized over a period of time, right? So that those costs have been completely recovered. So that is one of the main reasons for the drop in revenue without a change in cost. Okay, this happens. Even this year. We may be looking at exploiting some of the movie rights, and therefore we may be getting blips in some quarters, mainly because that's how the accounting guidelines say that if there is nothing else that we need to provide post revenue recognition, then we have to take it in the period in which it is incurred. Same way that the costs also happen. So expenses, we had a 3 crores of forex hit. That I will come to that, and depreciation I will cover, sir. See, we have taken the satellite on lease, and we also have taken certain STBs on lease, right? So the accounting guidelines say that I have to create a right of use and create a liability. Okay, so this is not necessarily that I've added fixed assets and it is a depreciation. Unless, for example, if you had bought a fixed asset and taken a borrowing, whether that asset is there or not, you have to keep on paying the borrowing and pay the interest. In case of a lease, what happens if it's a 3-year lease? You create a right of use on the asset side and you create a similar liability. Say 1 year down the line, you decide that lease is not required and you terminate, then the entire liability goes up, the asset also goes up. So this is largely, this depreciation is not arising out of any current cash that we have incurred, investments that we have incurred. These are lease rentals which we are going to incur in the future. Point number 1. Point number 2, the Forex 3 crore that I mentioned, Intelsat transaction of ours is a completely US dollar denominated. And when I create a lease liability for a future 8-year period, whether that liability is going to come or not, under accounting guidelines, we have to provide. And as you know, in June quarter, there was some problem of the Forex, because in May it suddenly dipped significantly, though it made up a little in June. So that was the reason for that is the reason for the depreciation. And the same reason comes for interest. So if you look at our debt book has remained almost the same between ICDs and our bank loan. The debt book has remained more or less same, which we are trying to correct now. However, when I create a lease liability and a right to use, the expense has to be split between depreciation and interest. It is a pure accounting concept, Mr. Rangaprasad. Okay, suppose I was incurring a cost of 10 crores based on I have created a right of use of 10 crores, then based on a discounting methodology, I have to charge the capital cost to depreciation and the interest costs to interest. So these are largely accounting concepts which are come in and do not represent any cash or anything like that. But coming to your point, yes, with a positive EBITDA, interest is increased. The only way, like I said, is to change the capital structure of the company. That is the only way that this can get rectified.
Amar, we also did mention...
I hope I've answered your question, Mr.
Yes. Yeah.
Amar, I think we also mentioned that we did share with Prasad sir and the analyst investors in the last call, and also the interview that we did with Economic Times TV and with Z Business on the steps we're taking for the capital structure. One is the real estate, as well as the real estate, as well as the looking at the opportunity that we have of the rights issue. with both of them being there, our idea is anyways to bring that to a more than healthy below 1 level. Right, Amar?
Yeah, absolutely. Today, our debt to equity is close to 5. Our idea is to, over a period of time, to bring in 1 or below 1. That's the healthy capital structure.
Yeah. Mr. Prasad, may I, any other question? May I proceed with other questions, sir?
Please go ahead. Please go ahead.
All right.
Thank you.
So I have a message here from Manoj. Congratulations on maintaining subscriber in the challenging environment. Thank you, Manoj and everyone. Will you be growing it much higher than the industry growth consolidation? Manoj, I think, one critical thing is something we've said is that growth should never come at the cost of profitability, right? That is one thing. Having said that, our idea is how do you ensure that you optimize an opportunity. I think our model that has stood us in good stead is that while we have growth on one side, our focus is not just on growth at a cost, our focus is also on optimizing our existing resources. Infrastructure sharing, great example, where infrastructure sharing without having to invest any further in growth, we're able to grow able to grow not just our top line, but our bottom line as well significantly. So that has been our philosophy. Your other question was, would you look at hiving off broadband and getting outside funding to grow it, to grow it multiple times? I think, we have a clear philosophy as a group. We believe that our businesses are integrated to build value for each other as one, as one large entity. And that is something that we will continue to do. To give you an example, for example, where is the opportunity? The opportunity is that while we may have over 5 million video customer base, we've got over 700,000 broadband customers today. As my colleague Yugal was talking about, and I think he mentioned it also in the last investor call, that 4.3 million gap is the opportunity already that is there for us to be able to strike out without having to depend on any, outside modeling, etc. And we believe that that is the right kind of way to go. And then your last point was margins in broadband business. I think it's a very challenging question. The reason being is there are different margins. Yugal, if you don't mind, I'll take this question for you. There are different margins for different segments, right? For broadband direct customers, there's this particular ARPU. For indirect customers, for franchisee customers, then you've got enterprise customers, then you've got enterprise class projects that are there. So I think overall, when you look at it, what we look at is what is the top line, what is the bottom line, and how does it kind of add value, and how does it integrate? So I hope that answers your questions, Manoj, as well. Anyone else happy to take? Is there any? I'm just looking at the screen. Right. Is there anyone else who'd like to raise any questions? Okay. Snyder, Banu. Okay, Manoj has raised one more question.
Yes, sir. Yes.
Yeah. Manoj, what would be the approximate cost saving to partners and infrastructure sharing? Manoj, this is a question again that depends from partner to partner, right? The partner could save 10%, the partner could save 50%, the partner can save 80%. It is a function of, how do I put it? It's a function of number of customers that he has and the connectivity. What do I mean by that? Let's take an example of, he has one particular location where he has only 100 customers, and those 100 customers, he pays 18 lakhs per annum to connect those 100 customers, right? And I can give it to him for, let's say 15 rupees per customer per month, as against him paying today, 200 rupees per customer, 150 rupees per customer per month. So that's a huge saving there. But if he's got 5,000 customers in a particular location and he's paying 18 lakhs per annum, then the benefit of savings would probably be lower. So I think again, it's a kind of case by case basis. What we believe in is that, and I have no qualms in saying this openly, what we believe is that depending on the kind of opportunity that is there and the kind of cost structure, we believe that customers, infrastructure sharing customers or partners can save up to 50%, of their connectivity costs. It's something that we've worked with and we're seeing in the case models that we're even talking to right now on that. So I hope that covers that. Snyder, Banu, I think everyone's probably tired, or everyone is upset with me for ruining a perfectly long weekend, which should have extended to today. And don't blame me. You all have all the analysts as well. Please don't blame me. There've been calls, I understand, right from morning to now. So I can't be held responsible for that. Anyone else? Please do feel free.
For any questions, I would request to use the Q&A window to type your questions, or you may use the raise of hand feature in Zoom control panel also to ask the question. So we have a raise of hand from Mr. Manoj Alim Chandani.
Yeah.
I would request Mr. Manoj to...
Manoj, you're on mute.
Hello.
Manoj, you're on mute.
Hi, can you hear me?
Yeah. Manoj, thanks for making it.
Yeah, sure. At the outset, let me compliment you for the good work you are doing in this pandemic, particularly among your staff.
Thank you, Manoj. Thank you.
In spite of challenges, a lot of good work has been done. Now, a couple of points.
Sure.
It was very nice. Amar articulated the intrinsic value very well in the opening remarks. You also addressed the questions which we had shared immediately after your presentation, which elaborated the critical issues. Now, a couple of points I would like to say. One is which is addressed to Amar, on what is the interest rate, average interest rate currently for the first quarter, and what is the comparative rate of interest, average interest in the last corresponding quarter.
Yeah. So we have had a saving of actually 100 basis points over last quarter. Last year quarter we were at about 11%. Now we are at about 10%.
10 is also quite high, no, compared to...
Yeah, it is. No, I have included all the ICDs, everything included. So my total borrowing cost is at 10%.
And how much you expected to come down in the next quarter? Because
our objective is to bring it down to between 8 to 9.
What is our current rating?
Sorry?
The current rating?
Current rating is A+.
A+. Achha, now another point which is based on the reply you gave to the question of another analyst, numbers for the first quarter, and you talked about that lease and interest and that means EBIT numbers are not comparable, right? YOY?
See, depreciation always will be like that, Manoj, because sorry. See, depreciation is completely a function of the capex or a right of use, or you acquire in networks. So depreciation generally cannot be compared on a linear basis. It will also be driven. For example, suppose we had purchased something on 31st of March. Okay, I would have provided depreciation for only 1 day. Okay, but now if I'm taking it for 1 quarter, I would provide depreciation for 3 months. So therefore, depreciation is not comparable on a linear model. It is more a function of the capex and the right of use and those kind of things.
No, I was referring to the EBIT numbers.
Yeah.
Which also I had shared with Winsley. Many database sites, including Money Control, look at EBIT after depreciation. And since you have this accounting expenses of lease and interest adjustment, that means EBIT for YOY is not comparable, or is it comparable based on the
report? Actually, what we compare is the we look at cash generation. Correct. So what is comparable is the EBITDA minus the interest. Correct?
Yes.
So that is what we compare.
Are they comparable, or there would be anomalies?
That is comparable. See, the interest component on a lease is very small compared to the depreciation component.
Yeah.
Right.
Okay, so they are comparable.
EBIT number is comparable.
Yes.
Good. That's a clarification. I wanted confirmation from you. Then about Winsley asked Jugal to elaborate about broadband, and we had talked about 93% growth, right? YOY.
Yes, correct.
and you have given some odd the numbers also 6 lakh something.
Yes,
Now
677. Yeah.
I would like to know specifically more details about the broadband industry, how industry is doing, and numbers, because numbers are very important. You are growing in this period. How much industry has grown, not by just percentage, the numbers last year, this year, and who are the main peers, and what is our market share as of now, the current number of broadband, which is 93% growth compared to the industry number, and how it is changing.
So, Manoj, one thing I'll request Yugal to put together. Yugal, may I request you to put together a slide, to have someone from your team, if you can ask Lakshmi or someone to put together. I think what Manoj has raised is a very good point. Like we have video, to put together a fact sheet. Who are the top 5 players? Obviously, we are in the top 5. What has been the growth in the last quarter? Anyways, all of this is derived from a trial report where we are there. But I think while you're getting those numbers ready for Manoj, maybe Yugal, if you can just share your thoughts on how the broadband industry is panning out, because we've seen tremendous traction. Where are we at in terms of our ranking? Just very broad thoughts, and then you can substantiate later with data.
Sure, Vince. So Manojji, as we all have been seeing, the pandemic has further, I would say, not only opened up the fixed line broadband in terms of penetration, but definitely the service levels, the expectations of customer responsiveness has gone much higher, because people are working from home, whether it's attending school for children or anything. By now we all understand that. And in that perspective, a big consolidation phase is going on. If you see the larger telcos have also started focusing on spreading their fixed line broadband play, and together with that, the pandemic, the way it came in, it further brought a tremendous pressure on the cost structure, because 40 to 50% consumption got increased in home broadband, and that led to smaller players not being able to sustain that cost structure. So a consolidation has started, and in that there are organic growth models, as well as inorganically there are operational mergers happening. So in that perspective, today I'm happy to share that we are in the top 5 private players right after the telcos, namely Jio, Airtel, and I would say Voda Idea. But Voda Idea is very close to our numbers. If you look at active subscribers, we would beat them, but still we call them ourselves in top 5. And of course, ACT is ahead of us. So that's where we are, and we've been growing almost at 90-95% a year, and we have demonstrated every quarter almost 1,000 customer acquisition per day, which makes us as the fastest growing ISP in the country today. So our growth is much faster than the industry growth at this point in time. Has been said, we'll put together more details. It's all there on the try, and we'll put together and share more details next time.
Exactly. We'll have that done, Manoj. We'll circulate. In fact, what we should do is we'll post it also on our website so everyone can access it. Banu and Snyder, I'd request you all to arrange and coordinate for that, because we should ensure it's done.
There is a CRISIL report also, Vince, which we can share.
Oh, the CRISIL report. Okay. Yeah. That's a good idea, Amar. That's a good idea.
Sure, sir. We'll take a note of it.
Noted, sir.
What's the market share of total broadband connections?
Sorry?
What's our total market share with Q1 reported numbers out of total broadband connections in the country?
So the market is about 23 million or so, and we would be 700,000. So market share wise, we would be slightly over 2%, close to 2%, slightly over 2%. But the market is fragmented, as you know. Almost 55-60% is fragmented with BSNL, MTNL, especially BSNL because of reach. There are areas where there is, like we have cable dark areas, there are a lot of areas where we have only mobile internet, right? And that too, there are so many areas we have only, 2G narrow band available. So that way, market share is 2%, but as I said, fast growing. and then telcos fall after that. And then in the major players, we have started joining that close to 1 million customers club. So if you see ACT with about 1.9 million, most of the top 3 players are in that same range.
Now this is interesting. If you exclude BSNL, public sector, in private sector, what is the market share?
So private sector, you can take off straight away about 10 plus, so 12. So 12, so about 10-12 million is the private market, out of which we are about 700,000
6%. Comes to about 6%.
Come to about 6. Manoj, sorry.
Manoj sir, Mr. Manoj.
Yugal was just being overkind. We are actually around 6% because rightfully so you will take away the BSNL connectivity and the MTNL when you look at it from a private sector. But Manoj, sorry, I'm going to have to stop you there. If there's anything else, please do let us know. You have all our contact details. Please feel free. We'd be happy to connect on this. Thanks, Manoj, very much as well. I shall pass on your appreciation to the team, Manoj.
Thank you so much.
Thank you. Snighter, Banu, if there's no one else, then may I close the session?
Yes, sir. Thank you, Winsley sir, Amar sir, and Yugal sir for answering all the questions. I would now request Winsley sir for his closing comments, please.
A big thank you to everyone who's made it to this call. I genuinely, like I said, appreciate. I always believe that these are not calls with investors and analysts. These are calls with, I term them with advisors, because the questions that you'll ask and the insights that you'll provide help us get our business together. There is, we always like being transparent, and I think sometimes the questions that you'll ask or the comments that you'll make give us tremendous food for thought. And I think all my colleagues here on this panel, as well as my colleagues in the office, appreciate that. And we can't thank you enough for continuing to do that and continuing to support our business. As I mentioned, we are very clear on our digital vision. We have a clear roadmap. I've shared with you the 4 verticals that we are focusing on, and the beauty is we are on course on all 4 of them. And we will continue to build value at every possible stage. As I said, we focus on our people and we focus on our products, and the rest automatically is a happy byproduct of that union. Thank you, ladies and gentlemen. Thank you, Amar, Yugal, Anand, the Ad Factors team, and Banu and everyone else, and to all the investors, analysts that have made it here today. Thank you so much, and we look forward to seeing you hopefully before the next quarter results as well. Thank you so much. Good day to everyone.
Thank you.
Thank you, sir.
Thank you,
Thank you,
everyone.
sir. Thank you, everyone. Look forward to seeing you soon. Thank you.
Thank you.